Hello, hello, good morning. Welcome to another ES Futures trading stream. Today is Thursday, August 17. It is 8:50 a.m. I think it's worth. I was just thinking it is very that is going to be very useful to have a stream today because there is a lot of information in this market that I believe is worth to review. The market is at a very interesting level at this moment. Let me move this thing. I'm just opening my trading platform. No, I'm going to put it here. This is where it usually goes. I'm just going to hide it. Oh, what? Can you see anything? Let me check. There is something wrong here. Okay, it is there. Okay, what I was saying that let's just check what's happening right now in this moment. Yesterday we have this big break, which I really question. Okay, I question the break because for the magnitude of the break, it was a considerable break here. It really doesn't have any volume. It don't have the volume. That's one thing. It was happening, and this is happening. You can see here how long it is. Even this one. I think this is big, but when Jim, I guess one of his webinars, he was asked about this volume, this increased volume. He just disregarded this volume. He said it's low, for the magnitude of the break. And I thought that, and I think that you remember well, that's this big day here. I think he has more experience. His experience is worth to. His words are worth to acknowledge. Now, yesterday I was checking this high here. Like how this market when was. Let me see if I can split this day here. No, I can't. Let me close it. Yeah, I can split in F. Right, here you go. Let me. These ones are not here. All right. When come on. Where it is? Here. All right, right there. When this part of when the market was in this part of the session, I was just, come on, man. Just look at this high here. You got 1, 2, 3 highs here. This part. I'm splitting this profile in two. And the high is right there. The POC. It failed to take the POC. And the relevant thing for me was that the previous day, we have accumulation of volume here in the first period from this day. There was huge volume here. Here. Over here. It was bought or sell. We never know what's happening here. If the market has this bounce from this level, it has downside extension, and it just dries here, and we never know what kind of volume it is selling or buying just after the fact. It was some selling because what happened yesterday. And the key was yesterday. And if you don't, how I know this is what it is. Let me show you where. Okay. What? God damn! I closed my chart. Let me open another chart again. I close my histogram charts. My comparator. Let me select an instrument. Because this is hard to see without the right tools. I do have it. I do have it here. I have put a notice in my. This is yesterday. Oh yeah, here it is. Here, right here. Come on, what's happening? Okay, it is right here. This volume here. Now about 10,000 here. And the market did what it did. It didn't have upside. It didn't have too much downside. It gave us a spike to the downside. The key is the next day. What happened the next day, just yesterday, we have this market coming back to that level. That's when this information becomes relevant. Up to that, up to yesterday, even at the closing, it's still, it gave us a spike. But when this piece of information becomes relevant is yesterday, when there was a lot of selling here. Having this kind of, this is very hard to do something here. Meaning, what I mean is, you know this level here. If this level is taken yesterday, it risks a serious, really serious short cover rally here to the upside. The market didn't do. Yesterday, I was putting some tweets there. The relevant thing from yesterday was the market, instead of what the market did, or instead the market, what the market is doing, the relevant thing yesterday was what the market didn't do. Okay, at the opening, we have a spike to the, we have the potential of a gap. The market did not have a gap. It could have opened with a gap. It did not open with a gap. The second thing is the market could have taken this low. It didn't take it low. And the next thing, the market could have taken this high here and have upside continuation. It didn't happen. Right? And all those pieces of information, when you start putting them together, is when you say, okay, wait a minute, there is something here. Right? That's when you have a trade. And it just come out of nowhere. Right? It just happens. But we need to be aware of these things, what has happened. We need to remember what happened before and what is happening now. It's not about what will happen. Right? That was, for me, that was the hardest part to understand. It's taken me too long to understand. I hear this many times, many people, many traders telling, it doesn't matter what will happen. What matters is what is happening right now. And thus, focusing in what is happening right now is very important. It seems easy. It's an easy concept, right? It is easy to put it in words, but to actually put that in the subconscious, okay, it doesn't matter what happened. What will happen, right? It doesn't matter what will happen. What actually matters is what is happening right now. I'm trying to be present in that moment. And when the market tried multiple times yesterday to take this high here, right? You can see here it has excess. It doesn't have excess. And from the histograms, from yesterday, you can see here, right? You can see the volume was here. Notice the accumulation volume at this level. It's also POC. There's a lot of volume there. There was a first price at which business was being conducted the previous day. And notice how it dries here. The next time it dries here. Next time it didn't even reach it. And finally here, it dries here. Right? Every time the market tries to take this level out, the volume just dries. It doesn't. Up to this point, it just doesn't make any sense, right? Here is when it matters because the market we were having some upside market to the upside, one time frame higher, and when the market takes this low out, this is when I took my chances here. I didn't even take it here. I took it down here, right, down here. But this is when we don't have that information, when we are, because most of us just are so focused on the intraday, so focused. It's just like, this is like there's this example this used quite often. It's like when you drive, right? Sometimes we just focus too much over the hood, what's happening over the hood, and then we lose, perspective. We need to have perspective. We need to see. We need to have a panoramic view of what is happening. You got the monthly time. We got the monthly, weekly, and daily time frames as well to keep in mind all the time. It is very important to do our homework. Doing the homework gives us some idea what is happening in the market. We have this monthly bar that was an inside bar, very close to the low, relatively close, no excess here. There was nothing. There was still an inside bar, but it's remarkable how close is to the low, and we still have half month to go to the end of the month. This can come all the way up to here as well. Remember that we don't have excess on the upper side. We have the high was made in the overnight. In the weekly, though, we have this four-week range, and the market was down here. The potential destination trade is the opposite side in the weekly time frame. The daily time frame, you keep zooming in and zooming in. You got a 4-day range here, and the market was right at the center in the daily. The market right now is at the center of the weekly. Now, the monthly has this big range down here. We have a perfect 2-month balance right now, but the month is not over yet. We still have quite considerable amount of time to go to close the month. The month has no exits, and right now we have this confluence. I guess we were talking about this before. There is not usual that the market has this sync, that's this reference that is reflected in every time frame. Right now that's happening. In the monthly, we are right here. The weekly has 3 weeks lows here, and the daily is right there as well. So this is kind of like an important level, right? This is an important level that if this level is taken here in the daily, in the weekly, and the monthly, there could be something here. This could risk some acceleration to the downside. If that doesn't happen, the potential of short covering also is very high. Now notice how we are in this downside trend here in the daily. You can see the market is going to the downside. So why are you, in a downside market? What is the trend? So what is the trade? Do you buy the dips or you sell the rallies? Question that. What you were doing. In the intraday, there could be some opportunities to the upside because the intraday has this back and forth, right? I mean, if I zoom in, I go to the market profile. We are seeing something, this high, for example, very questionable now, right? And we have the gap. Where's the gap? We have a gap up here, and the overnight high is the market high, which is kind of questionable. Now, all these profiles here are history. They are not words anymore. So what I'm going to do, I'm going to remove those ones because it just takes too much data. Space on my charts as well. I'm removing all these things here. Oh boy, it's taking too much time. I guess I have too much data already. It's getting too slow. I hope it doesn't crash my chart. Charts don't crash like it did the other day. All right. I have removed all this bunch of profiles that were here in the back, and I have my charts. What is relevant to me is this range again, this 4-day range here. Notice how it jumps from 14 to July 14 to August 9. Okay, because this is what I care. These last days and this range here. It's just a coincidence. Now, into the opening, we have an upside spike. This is weekly job reports that came out. You have a spike in the overnight. Which base? Look at this base here. Which is the base of this spike? The overnight spike. It's the same base as yesterday's spike. So which one is going to be? Which one? The overnight spike? Yesterday's spike? The overnight spikes to the upside. Yesterday's spikes to the downside. Value from yesterday was lower. The trade was to the downside. This is give us an idea, right? Which direction we must trade. What's happening here? Value is lower, so the trade is to the downside. Now, if the market opens below the spike, below the overnight spike, this is a rejection of higher prices from the overnight. This spike is being rejected if the market opens there. If it's neutral, if it opens down here, it's neutral. Or it opens inside the spike, it's neutral. Now, we have to consider also what happened yesterday. We have this spike to the downside. Opening inside the spike is neutral. Opening above is rejection of lower prices. Opening below is acceptance of lower prices. Opening inside is neutral. And we may have, there's chances the market can open right here, for example, right? Opening right here is neutral for both, for the overnight, from yesterday's. And these are, for me, these were the hardest times. When the market opens inside the spike, inside the range of the spike, that is always historically where I had the most hardest times. Now, if the market opens in here, somewhere, it does a scenario, opening neutral for both spikes, okay? Which would be around this area. That will, if that happens, my focus is this distribution here. The base of the spike from yesterday and the distribution, how the market behaves or reacts to this distribution. Can the market close the distribution? Closing this distribution puts this high on side. Remember, yesterday high is poor. It's very weak. It's very questionable. It seems really far. But if the market takes this low, we have been witnessing some short coverings that happen after the opening, very, very wide short coverings. That could be the case today if this high or this low or these distributions are close from yesterday. If the market opens in here above the spike, that's a rejection of this downside spike. At least that's for the short time frame, for the short term, in the very short term. Right? So I am not in a hurry to do any trade, but I am trying to put things in context. Because I haven't forget as well. Look at what we have here at this low. This is a very questionable low. This is the weekly. I have darkened this a little bit, because these are not relevant, not too much. It doesn't have too much relevance. But this is a weekly low. This was a weekly low. This is a weekly low as well, was a monthly low as well. This is a monthly low. So can you see? And this is a daily low. This is everything. You have confluence. We have confluence of monthly, weekly, daily time frames here, and the intraday. I was very close to having intraday. Every time the market has challenged the low of the day, in the last couple of days at least, has had a late spike to the downside. This could be even, the risk here. If the market takes this low out, there is a serious risk here, downside continuation, or acceleration to the downside. Don't miss the bigger picture here. I think that's the key here is it is very important to keep an eye on the bigger picture. Okay? Notice also the bond market here. Crude is falling. There's another thing here. There's something situation with China as well. The China's economy is weakening. We have seen some news yesterday. We were checking this news about how China has stopped reporting some things. And that's what happened in this kind of countries, autocrat countries. Latin American. Message China buying was for lithium to Israel served missiles to Germany. Okay, this is war economy. Can you look at this? Choker. Actually, cash about rising highs too high. Okay, this is gonna be good. You can see, there is more China in the news. Anyway, can you see how many times China is here? It's mentioned. There's a lot of things, right? This is good. This can be good as well. But the thing now, the market is reacting to this, to the news on China. Okay. Oh, we were on these frames. The dollar is a rally. It's short. We have a big rally here. We have trend to the outside. Crude oil is falling because seems some decrease. Some worries about China here. Gold. Oh, this is. Gold has a really nice trend here to the downside. This trend, you can put a trend here, trend line here. So this has been selling. Look at where it has been selling from. You can put a perfect trend line here. Very questionable selling. But what I was watching is this. How close the bond market is to these historical lows here. There is some really, it was both markets were bought at exactly some previous lows. It's just really close to that. This can put pressure on the market as well. What's happening right now? It has opened. They are trading in range. Dollar is falling. Gold is about same. So there may be some short-covering rally in the crude market, in the oil market. All right. Going back to this. Today is that could present, and after a day like this is a big day here. Traders may expect something like that to happen again. This huge range Again, the VIX is increasing. The VIX is increasing. VIX is how much is VIX now? Let me check. VIX is 17. VIX is 17. It's it's a really nice, something that I hope you have noticed. It's how nice the VIX, how nice this selling has been conducted. This is significant selling here. Almost, it closes this distribution. Almost the whole, the whole contract, when the market, this September contract started trading here, the whole range of the new contract has almost been retraced, and the VIX hasn't increased that much. And so this is really nice. This is a really nice selling here. Now this is pro selling the market. This is not crazy. This is not traders, killing the market, right? You don't want to butcher the market. If you want to sell, you want to do your selling. You want to complete your whatever you're doing. In this case, you're selling, in a tight range, right? You have a tight range. You don't want to start selling at 10 and close your selling at 2, for example. That's bad. It gives you a bad price, but it is nice, really nice. Okay. And my focus now is, as I say, there is a spike to the upside, a spike to the downside. There is a lot of things that happen in the market, and there's a lot of repetition, but repetition with variation. My focus is this distribution here, the closing of the distribution. Remember this poor high here, what the market can do today. We may have a short covering rally towards this end. This high is very questionable, but don't forget also the low. This is a very critical low where the market is right there, and the market has to take the monthly, weekly, and daily low out. Okay, we can consider as well that this trade has been completed. The trade was taking the opposite side of the range. In the daily, we still have a bigger range on the weekly, but that takes more time to develop. Okay. If you have any questions, please let me know. Otherwise, I will call it a day. I will keep posting some things in Twitter. I wish you guys excellent trading day. Stay safe out there. Bye-bye.